Hi there, tax accountants. I hope all is well, and I pray that as you're viewing this video that you're in the best of health and spirit. This video will cover Chapter 1's comprehensive problem, where you get the opportunity to not only theoretically understand taxation, but you have the opportunity to practically apply it. So we have this simple tax return here. All of the instructions are provided. We see that there's 4 tabs. The first consists of the instructions. The second, Maria's W-2 form. Then we have Form 1040, and we have the tax table. So the requirements for this problem is to complete Form 1040 for Maria Tallchief for the 2023 tax year. If there is an overpayment, she would like a refund. She wants to donate $3 to the presidential election campaign fund. The election to donate does not affect tax liability in any way. Maria has health care coverage for the full year. Enter all amounts as positive numbers. If an amount box requires no entry or the amount is zero, enter zero. If required, round amounts to the nearest dollar. So just some key information. And we'll start at the top. It says Maria Tallchief is a single taxpayer, birth date May 18th, 1996, living at 1990 Barker, Cypress Road, Cypress, Texas, zip code 77433. Her social security number is 466331234. For 2023, Maria has no dependents and received the W-2 from her job at a local restaurant where she is a cashier. These wages are Maria's only income for 2023. All right, so again, moving past the theoretical, but giving you the opportunity to practically apply the tax concepts and prepare a tax return. So before we get there, we're looking at learning objective chapter 2 from the textbook. So that way, as we begin to prepare this tax return, you'll have a better understanding. So some key things to keep in mind is that as we prepare, or for those of you who want to venture into taxation, there's tax softwares. There's a myriad of tax softwares. There's TurboTax, there's Drake, there's Lacert, there's UltraTax, there's Pro Series, Pro Connect. There's so many different tax softwares. And one of the key things, especially we're living in this day and age where there's a lot of AI, it's not just about tax preparation. There's also some softwares whereby they can take a scan of tax documents, and based on the scan, the computer, technology and its advancements can essentially prepare the tax return for you. But sometimes technology gets it wrong, right? Technology is not always perfect. So you want to be able to understand the mechanics behind tax return preparation, the mechanics behind the concepts and the tax laws, especially in the event if a client has a question. So just keep that in mind. So as it relates to reporting in taxable entities, learning objective 2, describe the different entities subject to tax and reporting requirements. So under US tax law, there are 5 basic tax reporting entities. We have individuals, we have corporations, partnerships, estates, and trusts. So here it says tax reporting entities, but it's very important to differentiate between tax paying entities, and then we also have what's called pass-through entities. So our tax-paying entities are individuals as well as corporations. Pass-through entities are our partnerships, our LLCs. So just keep that in mind. All right, so the most familiar taxable entity is individual. Taxable income for individual generally includes income from all sources. So gross income is not necessarily defined by the IRS, but a basic definition is that income from all sources with no matter where the source was derived, essentially. So I'm a US citizen, but in the event that, let's just say, I make money overseas in Africa, South America, wherever it is, it does not matter. I need to report all gross income. There are some nuances, there's some exclusions and some inclusions of income, but at the very basic level, gross income is essentially comprised of all income with no regard to where it was earned. So most individual taxpayers, they'll file Form 1040. For taxpayers that are ages 65 or older, they file Form 1040 SR. And they're fairly similar for the most part. And then we also have these supplemental schedules. So we have schedules 1, schedules 2, schedules 3, and these are used for additional income and deductions. As you start to prepare tax returns that are more complex, you'll see these schedules. But in the event that you have a client that just has W-2 income, as we're going to see in the example with Maria, we're not going to see these schedules. All right, so we'll get back to the problem. So again, we've read through the information. Maria, she is single. She just has this one job. So it wants us to complete Form 1040. One key thing to keep in mind, she lives in Texas. So Form 1040 consists of the federal income tax, and depending on which state you live in, you might or might not pay taxes. There are several states that do not impose a a state income tax for their residents, and Texas is one of those states. So for a person like Maria that lives in Texas, this also includes Florida. Someone that lives in one of the states that does not impose taxes, they only file taxes on a federal level. So just keep that in mind. So here we see Maria's W-2 form. So anytime you are preparing a tax return for an individual that is an employee that works for a firm, the W-2 form, it might look a little different, right? The layout of the form may look a little different, but at the very, foundation of it, A would be the employee's social security number. B would be the employer's identification number. So it's similar to an individual social security number. C would have the employer's name, their address, and their zip code. D, control number. Some companies information is input here, but for the most part, it has no bearing on the tax return. But one thing that I have seen is that with programs like TurboTax, with the control number, you can use that to essentially have the information that's reported on your W-2. It can automatically be imported. So just keep that in mind. But for the most part, again, it has no bearing on the tax refund or the tax liability. E, that contains the employee's first name, their last name. So all of the employee's information. Box 1 is always going to be taxable wages. So just keep that in mind. So when we look at Form 1040, if an individual has more than one W-2, then obviously on Form 1040, it is going to be the total of all of the W-2s. Box 2 contains the federal income taxes that were withheld. And this box ultimately determines whether or not an individual is going to get a refund or if they're going to have a balance due. So this is essentially when you are working a job and you complete what's called Form W-4. On that Form W-4, that ultimately lets the employer know how much taxes are going to be withheld from your paycheck, right? Box 3 and box 5, this represents Social Security and Medicare wages. So again, there might be certain situations where you'll see a difference between box 1, box 3, and box 5. In those situations, that's essentially because an individual, they can take advantage of 401k, right? You can have deferred compensation. So let's say an individual made $30,000 for the year and they put aside $5,000 through a deferred compensation with their job. Boxes 3 and 5 would show 30,000, but box 1 would show 5,000, the taxable amount from that year. And as we go on throughout the chapters, we'll learn a bit more about how that would be taxed in the future. But for the most part, again, box 1, this represents the taxable wages, which is reported on Form 1040. Box 2 represents the federal income taxes withheld. And then depending on the type of job you have, boxes 7, 8, 10, 11, 12, all of these things might or might not be completed. And then again, Maria lives in Texas, so none of the state information applies because she is not subjected to state income taxes. So we move on to our Form 1040. All right, so we see here for the Form 1040, I'll just make this a little bigger. All right, so we have for the Form 1040, this is the U.S. individual income tax return. It shows you the tax year, which is 2023. Here we have the client's first name, which was Maria, last name, Tall Chief, social security number. You always want to double check to make sure that the social security number is correct. If it's a client for whose return you've been preparing year after year, the information transfers over from the prior year. But if it is a new client, you want to make sure that the social security number is correct. So 466331234. We just double check 466331234. We make sure that the spelling of her name is correct, Maria Tallchief. We check for the address. It shows 1919 Barker Cypress Road, Texas, zip code 77433. All right. So if Maria were married, here it says if it's a joint return, spouse's first name, middle initial, last name. She's not married. So that information is left blank. Here, the presidential election campaign says check here if you're your spouse filing jointly, want $3 to go to this fund. So in this case, Maria does want to make a donation. All right. So next we move on to the filing status. So there are 5 filing statuses. The first, the single, that simply means that you are unmarried as of December 31st. Married filing jointly, that means that you are married as of December 31st. So even if someone had a marriage or a wedding ceremony, rather, December 31st, even though that person was only married for a day or several hours in the year, they are still considered married for the full year. Vice versa, if an individual was married for the year, but their separation agreement or their divorce decree is effective as of December 31st, that individual for tax purposes is considered single for the entire year. So that's why when you have clients, you definitely want to probe, get more information to confirm that you are, reporting the correct filing status. So we have single, married filing joint, married filing separately. Married filing separately, there are some clients who are married, but, let's say one spouse is working and the other isn't. So there's a bit of nuance around married filing separately. It's a choice, pretty much, right? And in the event that, let's say, a couple files a return, if there is a balance due, whenever you file a married filing joint tax return, both spouses are going to be held liable for that balance due. So that's something definitely important to keep in mind. So again, there's situations where there's one spouse that works and the other does not. Unfortunately, once you file that married filing joint tax return, both taxpayers are jointly and severally liable. Next, we have what's called head of household. This is essentially you are single and you have a qualifying dependent, whether it is a qualifying child or a qualifying dependent. And then lastly, we have qualifying surviving spouse, aka qualifying widower. That essentially means that you were married, your spouse passed away, and you still have a dependent child. That essentially allows you to have the same standard deduction, the same tax brackets as if you were still married, right? But one of the key things is that you need to have a dependent child. So in Maria's case, she is single. There's now this new question about digital assets. We live in this age with cryptocurrency. So it's asking at any time during 2023, did you A, receive a reward, B, sell or exchange or otherwise dispose of a digital asset? So the answer is no. Next, we see standard deduction. Can someone claim Maria as a dependent? Her spouse is a dependent. She's not married. Spouse itemizes on a separate return, or was she a dual citizen? The answer is none. Next, it asks about age and blindness. She was not born before January 2nd, 1959. She is not blind. And she was not born before January 2nd, 1959 and blind. So the reason why it's asking this question is because whenever an individual is over the age of 65, they get an additional standard deduction. So the standard deduction, that is basically, think of it as an amount of money that the IRS allows you to keep tax free, right? So let's say someone makes $50,000 for the year. The entire $50,000 is not subjected to taxation. First and foremost, you need to account for any deductions. And then in addition, we have what's called itemized deductions, which is a list of allowable expenses, of personal expenses by Congress. This includes medical expenses, charitable contributions, state and local taxes to a limitation, mortgage interest, casualty losses, and things of that nature. So you basically take the better of the two. So standard deduction, again, just think of it as an amount of money that the IRS allows you to keep tax-free. And if you are above the age of 65, there's an additional standard deduction. If you are blind, there's an additional standard deduction. So all of this is none. Again, very simple tax return. Maria has no dependents, so we leave that information blank. So now we move on to the income section of Form 1040. So here we see line 1A, it says total amount from forms W2, box 1. B, we see household employee wages. C, tip income not reported on line 1A, medical waiver payments, any taxable dependent care benefits from Form 2441, any employer provided adoption benefits. So line 1A, B, C, D, E, F, G, H, I. This essentially lists all of the various types of income, right? So in this case, we go back to the W-2 and we see here the total wages, tips, or other compensation is $23,671.98. So depending on the tax software you use, some tax softwares, they'll take the cents, right? They'll allow you to input the 0.98. But for the most part, most tax softwares, they will round it up. So once you enter it into the program, it'll be 23,672. And if we go back to the instructions, it says, if required, round amounts to the nearest dollar, right? So we wouldn't input 23,671.98. All right. Because if we input it that way, we see it'll mark it incorrect. But now if we round it, 23,672, which is us rounding it to the nearest dollar, now we see it shows it correct. All right. So again, for the most part, when you're using the tax software essentially automatically rounds. Most tax softwares, I should say, automatically rounds. Some don't. So just something to keep in mind. All right. So we input the information. Now Z is saying add lines 1A through 1H. So there's no other income. So we have $23,672. And then we see that there's some additional, income here. Doesn't apply, but just so that way you're familiar with Form 1040. So we have tax exempt interest, taxable interest. We have qualified dividends, ordinary dividends. We have IRA distributions, pensions and annuities, and we have Social Security benefits. And then 2B through 6B reports the taxable amount, if any. 7, we have capital gains or losses. This is essentially, if you have stocks, and things of that nature, you sell them, you have capital gains or losses. And then we see here to attach Schedule 1, if it applies. And again, Schedule 1 reports all of the other income. So for line 9, it says add lines 1Z, 2B, 3B, 4B, 5B, 6B, 7, and 8. Again, nothing else applies. Maria has a simple tax return. So we add it. 23,672 plus 0 gives us $23,672. So line 11, line 10 says adjustments to income. Again, we have none. So $23,672 minus 0 is $23,672, right? So now we need to figure out, we just calculated our form AGI, right? So anytime you hear the word AGI, it stands for adjusted gross income. And now we're trying to find our from AGI. We want to determine our taxable income because again, she earned $23,672, but that's not her taxable income. So now we need to determine, is she going to take the standard deduction or is she going to take itemized deductions? So here we look at this information. And then it, doesn't provide us with any information about any itemized deductions. So there's some cases where, a person didn't pay, any medical expenses. A person did not pay or, make any charitable contributions and things of that nature. So the IRS accounts for the fact that not everyone incurs these personal expenses that are allowed as deductions for tax purposes. So Maria is single, and based on the IRS, each year these amounts are increased for inflation. So the standard deduction for a single individual for 2023 is $13,850. So of the $23,672 that Maria earned, $13,850 of that income is not taxable. So for line 14, we need to add lines 12 and 13. 13,850 plus 0 is 13,850. So 23,672 minus 13,850, Maria's taxable income is $9,822. All right. So now we move on to the next step, and we need to determine the tax, right? So again, we live in this day and age where there's technology, and technology calculates the tax for us automatically. But if clients have questions, you want to be able to explain it. I truly believe that if you truly understand something, you should be able to explain it. So here we have the tax table. So this is, taking us back to the basics. You understand something theoretically, but you need to be able to practically apply it. So this is the 2023 tax table. So it says here, example, if you're a married couple filing a joint return, if their taxable income on form 1040 line 15. So let's see our form 1040 line 15, taxable income is $9,822 in this case. So in this case, what we simply do, you find the range, right? So we see here the range starts from 0 to 5, 5 to 15, etc. So if line 15 taxable income is at least but less than, your tax liability is going to be as follows. So the first column represents the tax liability for a single individual. The second column represents the tax liability for a married filing joint individual. The third for married filing separate, taxpayer. And lastly, for a head of household. So following that logic, we see Maria's taxable income is $9,822. So we basically connect the dots. Here we see, we're in a 9,000 range, and it's 9,822. So we see here, we find a range 9,800, at least 9,800, but less than 9,850. So therefore, based on this information, Maria's tax liability is $983. So the tax is $983. Schedule 2 represents additional taxes. And in this case, she has no additional taxes, so her total tax liability is $983. Line 19 and line 20, this deals with credits. Maria has no credits, so therefore we add lines 19 and 20. 0, she has no credits. And then for line 22, we subtract line 21, so $983 minus 0 is $983. And then line 24 is for if there's any additional taxes. So self-employment taxes from Schedule 2, there is none. So therefore, Maria's total tax liability is $983. So again, that is why, the federal income taxes as reported on Form 1040, box 2 is important. Or if the individual is self-employed, they might make what's called estimated tax payments. And even individuals who are not self-employed but they have other income that's not taxable, like let's say the individual received dividends, or maybe they have rental income and things of that nature. They have a job, they're an employee, but they also earn other income where taxes are not being withheld during the year, so they pay into estimated taxes. So federal taxes could be withheld from Form W-2, Forms 1099, any other forms. And then we see line 26, estimated tax payment. So we go back to our W-2 form, and we see that on line 2, box 2, Maria had $1,203.69 of federal income taxes withheld. Again, we know we need to round, so it will be 1,204. So 1,204 from the Form W-2. There were no other taxes withheld, so 1,204. So now we do the math, right? So this is the tax liability. And this is how much was given to the government during the year. So we paid more than we should have. Therefore, Maria is due a refund. So 1,204, and how much we paid? We were really only supposed to pay 983. So therefore, Maria is due to receive a refund of $221. So for lines 32, we basically, just copy over 1204. In total, she made payments of 1204. And again, tax liability is 983. She made payments of 1204 during the year. So therefore, Maria is due a refund of $221. All right. So on a very small scale, this is essentially how taxation works. With taxation, there's a tax formula. We're going to look at that quickly. So with the tax formula, as we see here, individual taxpayers, they calculate their tax in accordance with the tax formula. Very important, right? So we start off with our gross income. We subtract deductions from adjusted gross income. That gives us our adjusted gross income. From there, we subtract the greater of itemized deductions, which represents personal expenses that are allowed to be deducted for tax purposes, or they take the standard deduction, which again is just an amount that the IRS chooses each year. It's indexed annually for inflation, but it's basically an amount of money they allow you to keep tax free. From there, you subtract the qualified business income deduction, if any. You get your taxable income. From there, you have the tax rate, which we just saw here. So again, and it goes all the way up to, let's say, somebody that's making $98,000 or more, right? And then, of course, there's people who are making in the triple digits. So this is just, on a very small scale. But again, the logic remains. Does it fall between this range? What is the filing status? And that is how we determine the tax liability. All right. From there, you get the gross income tax liability and additional taxes, if any. You subtract any tax credits and prepayments. And from there, that ultimately determines whether there's a tax due or a refund. For the most part, state taxes are, kind of similar. Obviously, there are some nuances because each state does things differently. But on a very small scale, this is essentially how taxes work. So I really hope that, you guys find this experience of preparing a tax return enjoyable. Again, there's tax software, and the tax software basically does all of this, for you. But again, you want to be able to understand the nuance behind it. So if clients have questions, you know how to answer it.